The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We're going to start out the show today with the FTSE because we have a beautiful Gartley that we talked about yesterday, of course, and this being an hourly chart, you can now see what's forming is a 135 pattern with those three lower highs. This is going to be extremely important, so we want to watch that the next 2 days. Regarding the next 2 days, tomorrow we have Norm Winsky from Astro Trend will be our guest, and on Friday we will have Tim Bost from Financial Cycles Weekly. Both of those are very famous astrologers in Florida, so that'll be fun to watch. By the way, folks, the wind chill factor today here in Tucson will be about 72, but we will have a little sun to take the nip off the air, so we'll see how the weather turns out. Frankly, I don't know how those folks live through there. In 1983, when I was back on the floor of the exchange, I was there during the big blizzard of '83. There's never been anyone worse than that. I was on the 35th floor of McClure Court, and wow, 30 and 40s in Florida. Oh my goodness. But I was on the 35th floor of McClure Court, which is right off the lake, and it was so cold that the ice froze on the inside of the windows. And when it finally melted, it ruined the carpets in the whole building. It was terrible. It was global warming. Okay, let's move on and take a look at the old German DAX, because here we have a market that it looks so different than we're looking at in the FTSE, doing the exact opposite. You can see here that there's a very small three drive, near a double bottom in there. That pattern's a little too small to look at, but that's just a 15-minute chart. So it just shows that the trend is down, more than it is up. That's probably, what you're looking at as you're watching this today. The other one that okay, hold on here just 1 second, folks. We've got one market that is getting really ready for something pretty big, and I want to bring it to your attention here, because this is the one if you remember yesterday, we were looking at the natural gas contract, and you notice that we followed this through a potential three drive to a bottom pattern here, and the fact that it was doing exactly what we thought it was going to do was very interesting. And if we get this up, I'm going to go through a series of three charts here just to walk through the process of what we were looking at yesterday. And then finally, if we took a look at it today, this is what's interesting. Let's get this up here so you can take a look at this hourly chart here on the March natural gas. Now, folks, believe it or not, there's cold weather across the United States, the upper Midwest and the East. It's as cold as it's been in 25 years. This news should be so bullish to natural gas that it ought to be up about 30 or 40 cents. You should be trading at about 325 to 340. Okay, now, what we want to think about is why in the world is natural gas not going up with that tremendously bullish news? Folks, something's wrong with natural gas. I mean, if you can't get a market to go up with bullish news like this, there's something wrong. Maybe it's something wrong with me. That's really a high probability. But when the news doesn't go up with the market, boy, that is pretty good. There could be some supply in there, but I don't do supply demand. So, I'm just saying that news was really bullish. Evidently, they have a lot of supply. But let's just take a look. Where did this supply come from, folks? Look let's just get this up here. Look where we were. You just don't grow natural gas out of thin air. Look where we were with supply just about 6 weeks ago. We were trading double the price. So you tell me there was no supply up there at that time? Give me a break. All right, that's it. End of story. We'll follow it just to see what happens. Anyway, it's down to the 286 level. That's the 61% retracement off that really small range. But this is really very, very unusual to see the cold weather like this. not causing much. We're not seeing much in heating oil too. I mean, it's up a little bit, but it's very, very small. So we'll see what's going on. That's why I don't look at the news very often. But when the news is really bullish and the markets don't react the way you think they are, then that's something that's pretty important. If you remember yesterday, we were talking about crude oil, and one of the things that we were waiting to see is if crude oil was going to go up and make this. Oh dear. Hold on just a second here. All right, here, let's get this up here. And you'll see here that you'll make a potential up here for a 135 pattern at the 53.40 level. Well, what happened yesterday with the news item, with the crude oil, whatever the inventory number was, or I'm not even sure, but you'll notice here what actually happened to the oil was that we went up and made that double top without any trouble at all up in this area right here. Now the key level here, we're already going above. We're almost at $54 a barrel now. That's getting us very, very close to the 382 retracement on the long-term crude oil that comes in at the 55.88 level. So that is, that's pretty cold. Actually, Duffy, we do get days down here into the 20s. The coldest day I've ever had here in Tucson, I believe, was 19 degrees, but during the day, about as cold as it ever gets during the day is maybe 50 during the winter months. But pretty soon, we're starting to warm up in February, and that makes it a lot better. So that's a key one to pay attention to. Yeah, it's not bad. It's very nice. We're 72 miles from the Mexican border, and the weather is mild, and not only that, the roads are nice, the schools are nice, the medical facilities are as good as you can get, and part of that was true because John D. Rockefeller spent the last 10 years of his life, from 1929 to 1939, he lived here in Tucson, and then he moved to Florida this last few months to die. He died at 99 3/4. He wanted to be 100, but he didn't quite make it. But he left a fortune in foundation money to the University Medical School. So that's what's really interesting. See, we'll probably hear more about John D. Rockefeller because they talk about wealth now with Bezos and everything, but Bezos hasn't even come close to a dollar-adjusted wealth that John D. Rockefeller had. Now, John D. Rockefeller, he was the oil man, folks. He was the one that we went from whale oil, to kerosene to petroleum. That was his thing, Standard Oil. And, he was extremely wealthy, and they say he was by far the richest man who had ever lived. But, they're making adjustments for the cost of living. But if you ever get to New York and see his estate, I think the driveway up to the estate is hand-laid brick, and I think it's 13 miles. So he spent a few bucks building his place too. Look at William Randolph Hearst, the place he built up in Cambria, the Hearst Castle. There's another one. And then, of course, there's the one in North Carolina from Andrew Carnegie's, I believe. Anyway, let's move on here to a couple other of these things that we're looking at. We had a really interesting pattern here, if you remember. We'll just get it up here to take a look at it here in this gold XAU. I want to bring this to your attention because we've got some really good patterns unfolding here. You'll see this one here in the XAU market, and you'll be able to take a quick look at that one.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, we're going to take a look at the XAU. As you see, the cycle bottom that we had occurring right at a beautiful fib retracement. Then we had the big gap up, and then you see we've had multiple gap ups, and now we're completing a 3-drive pattern up here in the gold. This means that the gold could be very, very close to a pretty significant correction. So we're going to see if that is going to be the case, but we'll do, one thing at a time. Now, we got a really interesting chart from one of our friends across the pond on the German Bund. If you'll notice, that's the 30-year bond over in Germany, and you can see we had that big butterfly pattern complete up there. That was also on the long-term weekly. If you remember, that was a big ABCD on the weekly chart. Yes, Ruby, I will talk about hogs in just a minute, but first I've got to get through a couple other things, but I will cover the hogs for you. By the way, if you're in the sugar, Ruby, it's had a pretty good run, and now it's backing off a little bit. Don't be long that stuff if it gets below 1230. That would not be below 1230 a pound would be a breakdown of that 61% retracement, and you certainly don't want that. So that's something that you should pay close attention to, and then we will take a look at that as we go through. Anyway, we'll just hold on one second. Let's move over here to one other chart. I wanted to refresh your memory here on this long-term chart on the bunds, because I really believe this is going to be really important here. And if you put it up here, you'll be able to see that you have a beautiful ABCD pattern up there, and that's what we hit, and it's backed off the way it should have. Now, maybe it turns and goes back up, that we don't know, but right now, it really looks like it's really getting ready to head down, and that's just my opinion, of course. So that's another thing. Now we're going to take a trip, boys and girls. Let's gather around the fireside. Someone asked me a question about one of my most memorable trips, giving speeches and stuff. Hands down, well, there's a whole bunch of them, but one that I remember most vividly was in 1988. I was working with a group out of Switzerland. One of the primary people was the Bank Loy, and the Bank Loy was one of the big private banks in the okay, Holder says, please repeat in your words what Tim Boss has to say. That's going to be on Friday. I'll post Tim's thing in just a little. Well, let's do it right now before the story starts, I guess. Here's Tim's chart. He was on a month ago, if you remember, and this was his idea of his version of the Bradley. And as you can see, where we are right now is right at 0.4. So he's saying there's a possibility we could go up to 0.5, which comes in right about the 16th of February. Now, whether that's going to be the case or not, I'm not sure. So that's what we're watching right here. But anyway, it was 1988. The bank Loy had been my customer. Two other banks got together, and they had 25 bankers and their traders there. I flew over on a Wednesday. I stayed Wednesday, Thursday, and Friday. I had the seminar for Saturday and Sunday, and I started Saturday around 9 o'clock, and we got to be 5 o'clock. Everybody was excited about pattern recognition and astrology that I had showed them, and I said, well, folks, when we come back tomorrow, we're going to cover what to trade on Monday. And the person that put the seminar together said, we're only here for one day. We only had a one-day seminar. It's not for Saturday and Sunday. It's just Saturday. And I said, well, I'm going to be here. Anybody who wants to show up? I said, I budgeted 2 days. And everybody said, okay, we'll be here. So they were there the next day, and it turned out to be pretty good. But in that group were two traders trading for the Swiss banks from Germany. And, of course, we had a really fun day on Sunday, and the trading gods were with us. We had a terrific trading day on Monday, and they asked me to go to Frankfurt to give a little speech over in Frankfurt. And so I had to make a side trip to Italy to see where the old homesteads were and visit a few cousins, and then I flew on to Frankfurt, and it was I believe it was a Saturday seminar, full day, and I had about 40 people in the room. Most everyone spoke English, but some of them spoke it quite fluently. And as I got ready to speak, I said, we were talking about things that were going to be happening, and we were coming up within about a week of a major lunar eclipse, I believe. Solar eclipse. It was a solar eclipse. It was the 16th or 17th of March of 1980, and I'm not sure, but this was like the 7th or 8th. I forget which day it was. And just as I'm ready to start the talk, I said, folks, this is going to be exciting because we got a lot of things happening with cycles, and of course we got this big lunar thing coming up here, or the solar new moon coming up. And when I said new moon, half of the people stood up and started to walk out. And the guy that was standing at the back of the door, Marcus, I said, lock the door. I said, don't let anybody out. I said, wait a minute. I said, why is everybody, they were speaking German, and they were really against astrology. Oh my gosh. It was terrible. I said, look, this is a free seminar for you guys. I said, stay at least an hour or two. And if you don't like it, then leave after an hour. Don't leave after the first 5 minutes. I said, come on, this will be fun for you. You'll learn something new. Well, they did, and they did like it and everything. And so at the end of the day, they wanted to do a real live seminar with really live trading. And I said, sure. I said, we can do that. And I said, how many people would like to spend 3 days, learning live trading and everything? And I said, we'll limit it to just a few people, say maybe 15 or 20. And if you want to do that, I said we can certainly do that, and we'll charge $1,500 for the 3 days. And they said, that's hey, how about if I did this? Let's say you pay $1,500 for the 3 days, and if we're not profitable at the end of the 3 days, I said, I'll give you your money back. And the people that were sponsoring me in Frankfurt were back in the back of the room saying, no, don't do it. Well, we did it. And it was really exciting. I'm not going to be able to finish the story by the time of the break, but it was really fun. I spent, we were at one of the nicer hotels there at Frankfurt. They're all nice, but the first 2 days, all I did was teach them patterns and a tiny bit of lunar stuff. That's all I did. Basically, Fibonacci, A, B, C, D, butterflies. There was no butterflies at that time. There was Gartley's, but I didn't have butterflies until just a tiny bit later. It was early in '89 when I finally found the butterfly. So it was basically Gartley's, A, B, C, D's, Fibonacci, which I rely on. And so at the end of that seminar on Saturday, the two guys, Marcus and Mark, they said, how can you make a guarantee like that? You know, we've got so much money invested in this. If you don't make money, we're all going to lose. I said, no. I said I'd take the guarantee. I said, if I lose, I'll pay everybody the money back. He said, you can't be that confident. I said, yeah. I said, I think I can. I said, the reason why is we're going to have 2 full days of trading, all day of U.S. and all day of Europe. So with that much activity going on with the lunar stuff, there's going to be swings all over the place, and I think we'll be just fine. And I said, if not, I said, this is going to be a free trip for me because, you know, when I left Switzerland, not only did they pay me for the Saturday, they also paid me for the Sunday. So I was bucks up, and I'll tell you how it all ended when we get back. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I'll finish this story quickly. There ended up being 20 people there at the seminar in Frankfurt, and what I did was I split them up after I spent all day Thursday talking, and we did a little bit of trading, and we were ahead on Thursday just a little bit because I was more interested in, showing what we were doing than trying to be profitable. But we did have a pretty good day, and we were trading basically Forex, the grains, gold, silver, stuff like that. But the thing that was interesting was I split them up into 4 groups, and I had an ace in my hole. There were 4 of those folks there that had been my students, so they already knew how to trade. But I split them up into 4 groups, and I let them decide, one group would take the greens, another group took the metals, another group took stock indices, and another group took both bonds and what was it, bonds and something else. Anyway, we covered everything. And so when they were done with all their analysis, we would double check their patterns and everything and go through it. And the most interesting one was the grain group, because the grain group had an absolutely fabulous Gartley pattern. I mean, it was so beautiful you couldn't believe it. It was making a bullish Gartley, right over this eclipse, and it was just great. And the order was, when they opened on Chicago that Friday morning, which was report day, that it was a great report day too, and the report came in and it was very, very bearish. Well, in order for the Gartley pattern to complete, beans had to open down about 16 cents, and everybody was talking and everything. And our group, that group with the soybeans, was just arguing back and forth. I mean, they were vehement. And they were doing it in German, and I didn't know what they were saying. So I said, "What's going on?" And they says, "We cannot buy the soybeans." And I said, "Well, tell me why." He said, "Well, they're opening down 16 cents. The report's very, very bearish, and we don't want to buy them." And I said, "What's the buy order at?" And they said, "Well, down 16 cents." And I said, "Well, isn't that where you want to buy them?" "Yes, but the news is very, very bad. I mean, there's a big supply of soybeans coming in, and this is not the way it's going to be." And I said, "Well, you've got 5 people. I said, "You're going to have to make up your mind whether you want to do it or not." So everybody started trading. It was one of those days that everything went really well, and the soybeans opened 16 cents lower. I didn't ask them, whether they were going to put the order in or not. I said, "That's up to you." I said, "You put the order in, you put a 10-cent stop, that's it. You either win or lose." Anyway, 3 of the 5 decided to buy it, and so they bought the beans 16 cents lower, and believe it or not, that was the low tick of the day. And when the beans got to be unchanged on the day, they were all excited, beating on their chest. And when beans went almost limit up that day, up 45 cents, they were just ecstatic. And I spent 15 minutes just on the psychology of how it changed and what happens in trading when you get emotionally tied up to it. But anyway, it worked all right. I hope you enjoyed that story. I was very, very strong. The fellow from the Germany that put this thing together ended up moving to San Luis Obispo to trade near me for about a year, and then he moved on and went back to Switzerland and married a girl. And I believe I know he's still trading, but I have lost contact with him. Let's take a quick look here at the gold market, folks. We've got that breakout in the XAU. What we want to try to do is to yeah, thank you. I hope you like the stories, because I get tired of putting up charts all the time, folks. For me, this is not as much fun as it used to be. But anyway, let's look at the gold here over the past 3 days. You'll notice that top that we had up here. You'll notice the double 1.618 expansion numbers there were there at 1314. You'll also notice the 1.27 expansion number that came in at 1314. What we're expecting now is the gold to come down to around the 1307.5. That's equal to the drop that we had during January 28th. That was a $8 drop. This $8 down will take you right about to that 1307.50. So that's what I'm looking at. Now, if we get much below that, then we'll probably be looking at something a lot more sinister. So that's the key, to what we're looking at right here. By the way, folks, when you see the Dow Jones gap 150 points like it did this morning, realize that that's one stock. Today it was Boeing. Now, Boeing is, because the Dow Jones is price weighted, it's not cap weighted, it's price weighted. So the high value of Boeing, which is the highest stock in the value, when it opens 6% higher, that pushes you take 6% of 2,500 and 25,000, and there's your 150 points. So it jumps 150 points just on one stock. That doesn't mean they're all going to do that. That just means that's what that one particularly did. So pay close attention to that. Now, we've had someone ask about the patterns here in the E-mini S&P. I will bring this up. I posted just a minute ago, but we just hit the ABCD pattern here in the Dow Jones E-mini. So we'll take a quick look at it. It's 2656 and a half, 250. Let's see if I can get this right. 260. 2657.75 was the high, and the ABCD measures to 2657. So that's pretty close. Whether that'll be it or not, we'll have to wait and see, but that's completed. Now, the NASDAQ has been actually is not doing nearly as well, even though it's up a little bit more on a percentage right now. It's not doing nearly as well as the Dow Jones and, of course, the S&P 500. So that's neither here nor there. Now, the bonds, if you remember yesterday in the bonds, we had that beautiful Gartley pattern up there at that 145.22. We're now trading at 145.11. That's the kind of, move that we like to see when we look at some of these things. I'll bring this up here so you folks can look at it from yesterday. And, a lot of these don't work, but some of them do work. But, if we get above 145.25 today, that's most probably going to be a failed pattern, but right now it's looking like that's what it's supposed to do. So we'll just do one thing at a time. But the bonds do look bearish, folks, just from what we're seeing coming from Germany and what we see in the regular bond chart that we looked at so much. I'll bring that up to you so you'll remember that it does have some very bearish spots in here. Let's get this up here, and we'll be able to look at that. There we go. Okay, there we go. Okay, you're right, Dudette. That NASDAQ is getting very, very close. So we'll keep an eye on these as we go through the morning and take a look at it. As I mentioned before, Norm Winsky will be our guest tomorrow, and then on Friday we will have Tim Bost. And both of those fellows are very, very, very smart fellows. And, of course, their specialty is astrology. And, of course, Norm uses a lot of technical analysis along with his, whereas Tim is more of a classical astrology, and he uses the planets and the houses and all of the things that, to me, are very, very complex and hard to pick out. All right, we need to take a look at the little piggies for our friend Ruby, so just give me a second here to get the little piggies up, and we will take a look at them. What we're going to do is we're going to be looking at the June hogs, because those are the ones that will most probably be the most heavily traded here, because we're coming into the, oh boy, this is a really good buy coming in here in these hogs. Wow, very good, Ruby. Yeah, this is it. This is right out of the newsletter. Here's today's prices, of course, but you see we're very, very close here in the hogs. Pay attention to this one. This is going to be a real interesting one, because it's doing this in the face of some really negative news from November to January, because that disease is still there, from what I was told.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. No
matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour. Next on TFNN.
Okay, folks, we're going to take a look at the currencies now. You remember we had that big day on Friday. Here we are on Wednesday. This market went up just slightly. Look at these last 3 days. It's gone nowhere. It hasn't even made a 61% retracement. That's not actually bearish to the U.S. dollar. You know, it looked like it was getting ready to make a big move, but so far it hasn't. We would expect it coming in at that low at 112.70. That, and with that big range that we had on Friday, give me a break. This thing should be flying. It should be up around 115, I would think. Look at the last time that it moved. You know, it moved 100. It moved 200 pips coming off that last low back on, you know, February or January the 3rd. So this is just not acting as bullish as you might want to think. There's a lot of news out there about the death of the dollar, but let's keep the funeral open here because, you know, this thing could easily turn around and, you know, then you're looking at something that's going to be pretty nasty. You know, that's the key here, you know, to pay attention to. Now, let me do one other thing here. I have to change the charts here to get up the right one. Oh, dear, what did I do wrong? Let's do window tile vertical. I have to get it up here. I want to show you the Canadian dollar here because it's getting ready to take a flying Melinda to the downside. Let's just get it up here. Looking at it on a 4-hour chart, you'll be able to see, you know, where we are right now. Let's get this up here. Here we go. All righty, folks. Here's a Canadian dollar on a 4-hour chart. So using a 4-hour chart, you get 2 months of data in there, and you're able to see it easily with the smaller patterns. You'll notice back on the 23rd of January, we had that beautiful Gartley pattern almost exactly at the 382. The difference between the 382 and the 40% level was a total of 10 pips or $100. So it looks like that we're getting ready to move down towards the 129 level. Now, you know, the original short on this, if you looked at this on the long-term, you know, weekly chart, that was back at the 136.60 level. We stayed there for 4 days, if you'll remember, and then down she's coming. Now, if we get below that 132 level, you're going to be looking at, you know, something I think would be actually 131.80. We get below that, you're looking at that ABCD to the downside, and you can see the uptrending trend line that's there, and breaking that would take you down, you know, a whole lot lower. So whether that's going to continue or not, we'll have to wait and see. But that's been the strongest of the currencies. See, when you see this going down, that really means that the U.S. dollar is going down against the Canadian. The Canadian is actually gaining on the dollar. So that's a function of the futures that they have at the CME, which is not too much of a problem. I wanted to say a little bit more about that Dow Jones. the fact that it opens and all that other stuff. Back in 1982, when I was at the Merck, Byron Tucker and I had become good friends, and Byron was working with Leo Melamed at Delshire. Delshire cleared all their trades through Goldman Sachs, and Byron was in charge of the Goldman Sachs desk there on the floor. And so I got to meet Leo many times, and I would hear the stories about the negotiations, because this was now 1982, and the S&P had just started trading in April 16th of 1982. But those 2 years previously, Leo had really wanted the Dow Jones Industrial Average to be the lead contract, because everybody knew what the Dow Jones was, but nobody knew what the S&P 500 was. The Dow Jones family, the Dow family themselves, would have nothing to do with it. They actually embarrassed Leo a few times, saying he was nothing more than a gambler, and the futures markets were, inefficient and all that stuff. And what happened was, Leo said, okay, if that's what you want to do. And then, of course, 3 years later, 1985, actually, it was 83 when the Dow Jones broke out of the 1,070 level that had been in for many, many years, that, stocks became really important. And now the Dow family wanted to be at the Merck, but by then, Leo had already committed to the S&P, so he told him, you'll have to go to the Board of Trade or the NIFE to go in. Of course, they went to the Board of Trade, and now of all of the four contracts, the Dow Jones is still the laggard. The S&P is first, the Russell is second, the NASDAQ is third, and the Dow Jones is the fourth as far as open interest and volume. And, I don't know about respectability. They're all respectable, but that's the story. That's the story behind that. So anyway, we'll move on here to the next question that someone asked about, and I will bring it up here in just 1 minute, and that is the Dow Jones Transportations. I want to bring this up. We don't talk about this one very much, but you'll notice here, as of last week, we did make that 61% retracement. We have not violated that to the upside yet, so this is basically still in a downtrend. You'll notice that from point D, we had a secondary high there right after, right around the 1st of December, and then we had the secondary high here just a week or so ago. That is almost a beautiful 135 pattern, perfect 61% retracement. So as long as this does not exceed those highs that we made last week, you're looking at a market that has a more bearish bias than a bullish bias. Now, today the news is, pretty strong with Apple, going crazy. Boeing's up 5%. It was up 6% at one time. And, thank you, David. David White posts all these in here about all the things that are going on with all these. I don't know how you get them all there. You must copy and paste them. But there's all the different stocks that are moving, and it's really quite exciting. I haven't seen Apple. Apple should be up at what, 5 or 6% too? I think it was up that much anyway, but these are all, early morning things that we'll be able to see. We'll see. Here's a one mark, a 1 minute chart. That's going to be on my pay grade, Bill. I can't look at 1 minute. My smallest time frame that I look at is 2 minutes, and that's not very often, but 15 minutes will get you there. 30 minutes are fine. If you were to trade longer time frame, that 4-hour chart's a beauty, because you get to see all the stuff over a couple of months, and if you're worried about risk, that is by far the best. So go for a 4-hour down to an hourly, down to a 30-minute, and down to a 15-minute. Maybe you go to 5-minute, but 15 minutes usually enough to verify the patterns that you're looking at. Oh, thanks. You just for information, great. In fact, that's one of the advantages here at the TFNN Den is they post some really great charts and have some really great ideas for trades. So I highly recommend, if you're looking for some help, the TFNN Den does give you a big edge on some of these things. Let's take a quick look here at this Japanese yen here, folks, because we have been here for quite some time. This is also a big one with the U.S. dollar. We had that big move down. You remember on the long-term weekly chart that we post each week in the newsletter 24/7, that support at 104.20 was the same level that we hit here on December the 26th when they were playing games in Japan. And that's what they were doing, was playing games, because you can see how quickly it came back and stopped at the 50% level. And we've been here now for well over 7 days at this 50% level. So this is going to be an interesting situation here in these currencies, because unless they turn here, unless the euro turns strong and the yen and some of the others, you're going to be looking at a potential where the market would be, you know, ready to have a little bit of a sell-off. In other words, the dollar index starting to get better and better. One of the ones you want to watch really closely, folks, our friends down under over there in Australia. Watch this. If we get this Australian dollar at 70.75, that's 100 pips from where we are, but watch that one. Very interesting. 877-927-6648.
The universe provides us with opportunities all the time, and I was no different. In 2006, I invested $2,500 in a 2-day master trader course taught by Tom O'Brien, then ranked as the #1 market timer for gold. The fact is, if you want to be the best, you must learn from the best. Hi, I'm Steve Rhodes, author of Mastering Probability and the Market Timer of the Year for 2018. To celebrate this accomplishment, TFNN.com is offering you a free 2-week subscription to my award-winning newsletter service, and there's no charge to you until day 15 unless you cancel sooner. That's right, we're waiving the normal upfront deposit, and this offer is available to anyone and everyone, even if you've tried Mastering Probability before. Sign up now, and I'll teach you the tool that identified the bottom in the Dow on January 26th, the morning that led to the largest daily point gain in history. This offer will expire on February 10th, so go to the homepage of TFNN.com now and click on Mastering Probability.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to talk just a little bit about Brexit and the British pound. I've posted the 4-hour chart of the British pound here. The main thing is to look at the bottom there, because the low that we made back on the January the 3rd, that was the 78% retracement on the long-term weekly that came in at 124.60, and it rallied 8 handles. You can see the A, B, C, D pattern perfectly to the upside there at that 132 level. And now what we're looking for, by the way, we were able to get short up there, and now we're looking for our first objective if we do get it, and we don't know if we will or not, but the 382 on that would come in at 130.20. We're trading at around 130.90 right now. But it would be equal to the last BC swing that we had back on the 14th and 15th. That move went from 129.50 to 126.80, so it dropped about 120 pips. That would get us down right near what that 382 level would be, and so that would be the first objective on this if it in fact happens. If you happen to be in this trade, your stop is now at break even, so you're in a free trade, and you probably shouldn't look at it because watching the prices each day certainly doesn't help very much. Remember tomorrow that we have Norm Winsky on. Have your questions ready. We'll try to put his feet to the fire and make it nice and warm for Norm. And then also for Tim Bost from Financial Cycles Weekly. He'll be on Friday. And then the following week, we're going to have hopefully a couple of new guests. I'm trying to get Ray Merriman from the Merriman Stock Market Cycles. He's really one of the premier astrologers. And also Linda Long from the Fibonacci and Galactic Trader down in Florida, which was Jeannie Long and Robert Krause. She's Jeannie's daughter. And I hope Linda will come on and tell us about some of the fun things that they have going on there at the Galactic Trader and Fibonacci Trader. So all those guests will be fun, and you won't have to listen to all these little patterns and these old stories from the old cowboys. So Walter and I are going to go out to the desert, have a little walk now. So live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.